Godrej Consumer is the stock in focus. The company reported a mixed set of earnings in its June quarter with EBITDA missing estimates. Mangalam spoke to the CFO of the company, Aasif Malbari, and he started off by asking him about the road ahead for normalization of margins and the demand scenario as well. Listen to the conversation.
So I think you're right. I think on a top line, we've seen a sequential improvement, a strong double-digit revenue growth at 10% with a very strong underlying volume growth at 8%. Even in India, we've seen an 8% revenue growth on an India standalone basis. So top line's kind of now steadily improving and inching to levels at which we would be happy with the top line performance. Profits were flat in this quarter. Broadly in line with what we had guided the street before we began the year. We had talked about sequential improvement, second half being better than first half. That's the kind of guidance we would hold currently also. So definitely Q3, Q4 margins are going to be much better than what we're going to see in first half. Q1, Q2, we are kind of looking at commodity prices in terms of costs being significantly higher than replacement costs. Palm oil had kind of run up a lot, and we were hoping that there will be some consolidation correction in palm oil, which started happening from May, June. July, August has been now kind of stabilizing at lower than the highs which we saw in parts of Q1. So we'll have to wait for consuming costs to come more closer to the current replacement levels. So you will still see the first half margins being below normative, and then second half margins come back in that range.
Let's put numbers to that. The India margins in the first quarter close to around 23%. Your range is 24 to 27%. Same time last year you did about 26%. Where do they go in the second quarter and the second half? Do you expect them to move above that 24 to 27% or in that band?
Yeah. No, we do expect second half margins Q3 and Q4 to kind of come into the band. And hence definitely kind of move up from where they are today and come in the band. At an overall consolidated level, we had guided the street that we should see a high single-digit revenue growth at a consolidated level and double-digit EBITDA growth at the consolidated level for the year. We think we'll be broadly in line with the guidance.
And this despite the 4% decline that you've seen in the EBITDA. I just wanted to understand a little about your international business as well. Indonesia seems to be, impacted by tough macros out there. The revenues have declined. The EBIT has declined a lot more. How long before we see signs of improvement? And where does Indonesia be in, say, the next 3 quarters?
So again, I think the situation in Indonesia is slightly more pricing pressure and macros. The last few months have been to that extent difficult from Indonesia's perspective, but we do see these as temporary factors. It should be a few months of pressure, and then we should be getting back into our growth trajectory, both on top line and bottom line. So again, I think for Indonesia, a second half likely to be a time when we'll start seeing both top line and profit growth.
What would the nature of this growth entail on a consolidated basis? Will it be household insecticide-led? Will it be home care-led? Or you think personal wash will be the one on a low base and after many months of weak macros come back? If you could give us a sense on that.
Sure. So actually, if you look at the Q1 performance, Mangalam, in India, looking at the portfolio, apart from soaps, it has been a very, very strong performance. Our performance in terms of the rest of the portfolio has been in mid-teens. All categories have kind of done well, and it has been a broad-based performance. So household insecticides has done well, air care, laundry, perfumes and deos. So we've actually had a strong performance across our portfolio. Personal wash has been a couple of months of a lot of rebalancing, very, very aggressive cost increases in palm, and hence rebalancing happening in terms of grammage changes, and these have been multiple changes which have taken place over the last few months. We do see things stabilize towards end of Q2 on personal wash, and hence from Q3 onwards, again, that part of the business should also come back. So yeah, I mean, the pressure in terms of sales has been only in one category. The rest of the portfolio in Q1 has actually done extremely well.
Do you have a word on competition? Because you have called out some sort of competitive intensity, and now your biggest competitor has a new leader as well. So perhaps, there could be some more aggression in the market. Do you expect that to happen?
So, I mean, we talked of competitive intensity in the context of Indonesia, where we said, listen, it's been a bit of a pressure in terms of competitive intensity and hence pricing. From an India perspective, we have a good innovation pipeline. Most of our innovations over the last year have kind of done extremely well. And hence, we continue to chart our own trajectory and continue to kind of stay ahead in terms of growth.
What about Raymond? How did that portfolio perform in the first quarter, and what's the prognosis for this year?
Yeah. No, so we should be seeing a double-digit growth in terms of that portfolio. It's actually kind of performed well in Q1, and most of the actions which we've taken have been well received by the market.
All right, and final question. Pet care, do you have any quantifiable numbers that you can give us in terms of an aspiration here?
Early days, Mangalam, we introduced the product in Tamil Nadu during the course of this quarter. Has been received well with consumers there. But early days in terms of giving a number. We've spoken in the past that aspiration would be to kind of get to a 500 crore business in a span of 4 to 5 years. So we kind of stay with that guidance.
And double-digit volume growth by the end of this year, is that a possibility on a standalone organic basis?
That remains our aspiration. So that remains a North Star. I think we should start inching closer to that. Definitely, we'll see our volume growths inch up from the 5% level as we kind of see the completion of this whole pricing rebalancing in personal wash. So we will see volume growth inch up, and the aspiration definitely remains getting as close to double digit as possible.